Hey, this is BA and welcome to w.d.gann's Trading the Forecast Part 2. Today is February 12th of 2016 and Part 1 of this series was just simply showing the line between forecasted points and all that stuff. What we want to do in this one is more or less kind of systemize it so that a forecast can be used in actual trading. You know, how do we get from the forecast to actually getting something that can bring in some money? And that's kind of what this series will do. Now, there's two levels to this. The first level is doing the cycles, doing the forecast, and not having price. And that's what we're going to do today. And then the next level, which I'm going to do in the series later on down the road, the very next level after that is actually having price. Because once you have price, that's a huge advantage. And the way to get w.d.gann's price systems is to use his time cycles. Okay, his price systems work with the time cycles. So if you don't have the time cycles, if you can't forecast, or if you don't have access to the forecast, you're wasting your time trying to figure out, how Gann was able to call price so accurately. And so that's what we're going to do in this one. We're going to take a look at this, and we're going to go back and take a look at the Dow and S&P here. Let's get started on that. Okay, from the first video, all we did was, we drew in the line. This is the same line from the first video, okay, that we did in this series. Now, what you'll know is I got a very simple oscillator here. It's called stochastic RSI, okay, and it's it comes standard with the NinjaTrader software that I use. There's different ways of doing this. There's different, how can I put this? This isn't the only way. All you need, and all we really need, is a trigger point for entry. And the reason for that is we already have the cycle dates, okay? Remember that in the first video? If not, let's bring those back up and take a look at those again for a second. Here you are. These are the dates again. These are the forecast dates. And these are important. And like I showed how to map those out and all that stuff. We're going to go back here and we're going to combine this with an oscillator. Okay, so basically this is how those came in. And these were all within one trading day. The forecast. Now, so unlike most people, we can see that this. Let me get this up here. Unlike most people that have no idea where, when it's going to stop, our forecast nailed this. The low for the forecast was October 24th, which was forecasted about a month in advance. Okay, and so it was dead on. Nobody out there knows this stuff. They're all trading this weird stuff. And if they catch a trend, they don't know when it expires. Okay, they don't know when to expect a swing low or a swing high. They try and figure that with all this technical stuff. It's not how it works. You have to use w.d.gann's time cycles. The time cycles are actually what causes these swings. Okay, and that's a very important concept. But anyway, how to trade this. So we'll know when the move is stopping. Okay. I've already showed you the line and stuff, but we have the date. So we know, like say as an example, plus or minus one trading day on August 24th, the move was going to be over. Okay. Nobody else hardly knows that. So up here, in these areas and stuff, what we need is we need to find a way to enter the trade. We don't need an exit because you get close to that, like say August 24th, well, one trading day either side, you would have been, this was a Friday, but you would have been August 21st here, okay? And you could have put on a trailing stop. You could have followed it down with the trailing stop, and it really wouldn't have got hit until this next day. It would have got taken out. Your trailing stop would have got triggered on the 25th, which is fine. I mean, you would have got a lot of profits there, and that's good. That's the goal. So we don't really need, with that technique, we don't need an exit strategy. We do need an enter strategy. Okay. And for that, a simple oscillator will do. Now, I've seen people and I've known traders over the years that have used all sorts of kinds of these oscillators. Okay. So what you have up here is the stochastics RSI. That's the first thing I threw up. Okay. This isn't configured any special way or anything like that to achieve or maximize results. I'll leave that up to you. And this is definitely not the only oscillator out there. A lot of different types. Okay. But let's look at how this oscillator would have kept us out of a lot of these trades that wouldn't have produced results. And let's, more importantly, look at when it triggered to get in. Okay. Now, we started, like I said, August 1st. We did August and September here in the forecast, which is the purple line. And we want to look at this sideways movement. Okay, all this is sideways chop. I'm an options trader. I mean, yeah, you can scalp in those, and I'm a swing trader, so I like moves like this, which I'm sure you all do too. But I like to stay out of moves like this. Well, how do you do that? Okay, and there's different techniques, and there's all sorts of ways of complicating it, but there's a very good way to do it simply. Okay, because you have the forecast, where these changes are going to be. So all in this area, it's sideways. Well, what does our indicator do in that time period? Well, if you look down here, it's all sideways. It doesn't cross the red line. Pay attention to when it crosses the red line. Okay, now it's not 100% infallible. I'm not saying that. But in the majority of cases, when it crosses that red line, it indicates something. Okay, and it really doesn't do it until it doesn't cross the line till here. Okay, till here. All right, so it kind of in this area up until this point, because my question is, how do I stay out of this? And how do I catch the good swings? Well, in that area, it's kind of sideways. Yes, we cross into the red, but just barely here and just barely here. It's not really a definitive move. It's all sideways. The first indication that we have that something's really going on is up in this area. And move this blue line. I have to, because of the way this is done, I have to do it in two parts. Our cycle point up here would have been the indication. Okay, meaning on that day it actually goes up instead of just right by the line. I like these areas above and below the red line. I like to see it up there for a little bit, not just barely making it up in a sideways market. I think it's all chop, you see. But when you do this, okay, look at what day are we forecasting a pivot. And it was October 14th as a pivot, but that's a Friday. So the next trading day, is, which is fine, is August 17th. And that's that point there. On August 17th then, and August 18th, you see how the oscillator's up above the red line. And on the 18th, it goes down below the red line. That's an awesome indication. That can be used as a trigger. Look at that. And that would have got you in somewhere in this, because after, even if you would have waited for close, which is, we're not going to get into the intraday aspects of this, waited to close, if you would have got in early here, noticing that this indicator's here, and noticing that the move is, going to be to the 24th, and this is the 19th, okay, or that's the 19th here. This is the 20th here. I mean, that's, you can get some good points that way. All you need is a trigger, and this provides it. Look at it. It stayed above the red line, then it crossed down. That's what I'm interested in. Okay. Good trigger. How did it do down here? Let's have a look. Okay. If you look at this, we cross into the red line. Now, see here, here's the deal. This, I'm not using this as a trigger to get out. It doesn't matter anything to me when it goes into the red line here. Well, let me grab this. It doesn't matter. And the reason for that, the reason why it doesn't matter is because right in here, it goes in and it's oversold to about here, is because I'm not going to use that in any way. What I'm going to use, because it actually goes in here, which is this day. If you would have used that as a trigger, you would have missed out on the bulk of the move. I would never use that as a trigger. Okay, crossing over the red. If I don't have price, I use time. Okay, and our time says it won't be up until August 24th. Well, that gives August 23rd. Or what's that trading day? I think that was a Friday. Yeah, Friday. Okay, so that would have given Friday. This is Monday or Tuesday at the latest. So Friday, I would have put on a trailing stop. Okay, ignoring this down here completely. I don't care what this does, and I would have followed it all the way down. And that trailing stop would have been hit on the 25th, if not intraday on the 24th. You see that? So I would have been down in this area. Okay, so I do not use it to exit. I use it to enter only. Okay. Now, let's go to our next point. We cross into the red, and that's good. That's what we want to see. And on this day, we cross out. So between these 2 days, which is here and here, which is the bottom here and this, we cross that red line. Okay? And that's exactly on this date. So I would have got in on this date. Okay? If not, sometimes if you know what you're doing, you can do this intraday and catch it right when it does cross the red line. Okay? Which means you would have caught some on that day. But I would have got in here and rode it up. Okay, and I know I was close to the end of the move, so I'd put on a trailing stop. Okay, now in here, this is sideways. This is sideways. Now, could we have made some points there? Absolutely, but the system would have had you out. It would have had you staying out because we cross the red line here and we stay in the red. Then we cross it here. Okay, but we're going into the red. We want it coming back out, so it would be right here. Okay, right between these 2 days that cross. So I'll pull that up on what day that is. Okay, right there. So on this day, it's going up. Now our cycle actually did September 22nd. All right, as a high, and so it would have cut in that area. But what's important here is that we were heading down from that point, you see. So we would have been, after this move, we would have been kept out until this point, meaning all this junk, let me get this, all this junk here, we would have been kept out of. All this junk. It would have stayed out with using this. And there's, like I said, there's ways to fine-tune this and to apply it, but we would have been out of all this junk because it didn't cross back from the red until this point, you see. Okay, until that point, and we were actually expecting a little bit of a high there, so that would have been tricky. But it was set up. Now down here, so our next one. Our next one would have been down here. Now, I believe the actual cycle pivot low was right here. Okay. But when did it cross the red? Where's my... there. When did it cross into the red? Exactly. Okay. There's this day, which is the absolute low, and there's what I think's the cycle low here. Okay. So on this day, either intraday or, towards the end of trading day or whatever, you would have got in here. Okay. And you would have rode this up to whenever the cycle was up here. You see that? So what I'm doing is I'm using this simple stochastics or RSI. Okay, and I don't even know what my days were on this. There's so many ways to do this, and you can fine-tune it. Okay, I went up here on NinjaTrader and just simply clicked one, and you can see the settings. These were the default settings. I didn't even, look at them. Okay, so this you could systemize this. I've seen people do it. I've seen them be successful in doing it and consistent. If as long as they play by the rules. Okay, but the last point is we crossed the red line. We stayed in the red and we crossed it there. Okay, and stuff. So what I want you to do is I want you to take some forecasts. Okay, doesn't have to be S&P or whatever, but take some forecasts and work with this and see if you can't systemize it on whatever forecast you're working with. All right. Now, like I said, there's another level above this, which of course is knowing where price is going to be, knowing exactly the price pivots of these time cycles. And that's beyond the scope of this video. I'm going to put that in the next video. Okay. And that's really got, that's when things really get interesting, but you have to start somewhere. Okay. So here, as you can see, this is a simple moving average. I used a default. I didn't tweak it at all. That means anyone that has a copy of NinjaTrader can enter the same thing as a default, and this is what will come up, and you'll get these same results, okay, through this period. So there's other, there's stochastics out there. There's moving averages. There's all sorts of different oscillators that you can use. Find something that works that will consistently time your entries as much as possible. It's not going to be 100%, but consistency, timing your entries and keeping you out of the slop unless you could trade this area and scalp a little bit. I like the bigger setups. Of course, who doesn't? But, I like this. I like this. These are the ones I want to trade. I'm out with this stuff. Years ago, I would try and, and scalp it with options and stuff, but I spend my time elsewhere these days. I guess I'm getting old. All right. Let's talk briefly about a couple of factors that influence the forecast. Okay. There's the orb issue, and like I said, you want to be, you've got w.d.gann's consistency when you're 90% accurate to within one trading day. Now, I said trading day, not calendar day, because there's weekends, all that stuff, those don't count. So you want to be 90% accurate to within one trading day. What are two factors that influence that 10% that you're going to miss? Well, of course, the pesky inversions. Okay. Inversions is, they're knowable in advance, but w.d.gann would miss one or two a year. And what he would do is he'd have to telegram his subscribers to his newsletter and say, hey, the market inverted. Okay. And that's one of the reasons why, I don't want to do that. I don't have subscribers because I don't sell my forecast, but I don't want to do that. And so what I do is I just do a monthly one. And if there's an inversion that I miss, he said he'd miss one or two a year. And if there's an inversion I miss, I'll just let it play out to the end of the month because I do not believe in changing forecasts. I've seen people forecast and, in a month, they've changed their forecast 6-7 times. When I put a forecast up, it's gold. If it's got any errors in it, I'll have to take the lumps. So you'll see inversions once or twice a year that'll mess up a forecast. And now being a trader, you'll know where those are at because there's you'll know exactly where the inversions are. They're predictable in advance, but the problem is some of them are what we'll call on the line where you can't tell if they're going to activate or not. And those are the ones or two that Gann would guess at during the year. Okay. But some inversions like this is definitely here. And, you just go right through. It's no problem. And you put that in the forecast. Like there are inversions in my forecast. And, they're accurate. Not 100% accurate because I miss like Gann, but they're accurate. Another thing that impacts the forecast is your orb. Okay. 90% accurate to within one trading day. Okay. Well, the 10% of the time is I'll get a 2-day. Like I know that I hit this dead on, but I don't expect, everyone to believe that. But here is the point down here that most would use, but still, it's still within one trading day. You see that? This is the forecast is September 29, and then it came in September 30th. So there's two things that impact it. There's orb and inversions, and that 10% for me most of the time is instead of being one trading day off, I'll be two trading days off. And there's ways to really focus in and stuff, but I don't. I trade options in IBM. I don't trade the S&P. I don't trade currencies or whatever, but I do forecast them. So I don't spend a lot of time because I don't make any money from the forecast and I don't want to, but I do spend a lot of time with them, but I don't need to have that type of accuracy, which would cost me more time to go in and ferret out the exact things on everything. Okay. Well, I'm rattling on now. But anyway, take this concept and use it. It's extremely powerful for someone that doesn't have price but does have access to forecasts. Okay, well, this is BA, and have yourself a great day. Bye-bye.